What's your take on gold right now? And also, because of the inverse relation it has with the dollar, what is your own sense on where the dollar goes from here?
There's quite a few factors that are at play with the gold market at the moment, and we've really seen the tide turning very quickly in terms of those drivers. Last year, the dollar was one of the biggest hurdles for the gold market, and it really capped that upside momentum. But then we saw this surge in central bank buying, helping to gold rally and offset some of those macro headwinds. Whereas this year, we've seen some of the risks around US regional banks, whether it's concerns around the US debt ceiling, have come to the forefront, and that safe haven demand has helped to push gold higher. But coupled with that, the fact that at the start of the year we started to see the dollar weakening really helped gold to push higher and almost close in on those record highs. So we think for this year we've been chopping and changing with some of those macro headwinds receding. But over the past few sessions, we've seen the dollar strength coming back into play. We've seen the market starting to focus on the scope for potential rate hikes in the June meeting, and those have presented some headwinds for gold market. But on the other hand, we started to see a pickup in investor interest, but even that has now started to recede. So we think that there is still scope for gold to test all-time highs in the coming weeks, but thereafter we think prices are more likely to trend lower.
Trend lower, what's the broad range that you're expecting on gold?
We think that we've seen the floor for the gold market starting to rise. So at the start of the year, we were seeing a good floor for markets around 1850. That's where the physical demand had started to support prices. But we think that has now risen to around 1950. There's less appetite to want to short the gold market. Positioning is broadly neutral, or investors still want to be long. But we think that we're more likely to see prices trending towards 1900 as we get towards the end of the year. And that's largely because we haven't seen the pace of investment demand that materialized after the collapse of SVB continuing. It's actually started to slow down. So without that strong investor demand, and we expect some of that central bank buying to start to slow down, although remain very strong, I think the physical market is likely to offer a floor for the gold market, but at a high level. But without investor interest, we're likely to see prices trending towards 1900.